All right, so the next form we're going to look at is the form 8865. So this form is required where you have a U.S. owner of a foreign partnership. So the way I like to look at this form is there's two different types of filers. You can have an annual filer, so a filer that has control, a U.S. taxpayer that has control over the foreign partnership. They're going to have to file this thing annually to report their share of the foreign partnership. And then there's your one-time filing requirements, and that has to do with transfers to the foreign partnership or contributions of money to the foreign partnership. And that's more what we're going to talk about today. I mean, don't forget that also, I mean, if a U.S. person owns 100% of a foreign partnership, they're going to need to file this 8865 as well. But what we're talking about here is the footnotes that we generally see in these fund K-3s that are more focused on the contribution and transactional side. So the practical rules for the 8865, it's really pretty simple, and that's why I put these two together with the 926. It's really the same rule. Remember, the 926 is a contribution to a foreign corporation. It's a very narrow rule with the 926. It can't be the S corp or partnership. It has to be the individual owner, directly or indirectly contributing to a foreign corporation. So that doesn't include a foreign partnership. So here, the foreign partnership actually has its own 926-like rule, but you don't do it on a separate form. You do it on the foreign partnership form, which is 8865. So it's really the same 10%, $100,000 rule that we just talked about. Let's see. And, again, this is another area where there's not a specific part to the K3. They do call out the 8865 in part 1, but it's not like the PFIC section or the control foreign corporation where it has its own section. So we'll look at these things to look out for. All right, so let's keep moving here. So the first example I have, again, we'd start with the K1, and usually, so again, I've taken out the taxpayer information here, but the important parts to look at is first we know we have a K3 that's going to be attached. We know we have a minority percentage, so less than 1% ownership. And then you look down at the capital account, we see there's a big contribution of $375,000 during the year to this partnership. So that already gives us a little bit of information. So then we would go to the K3, and box 12 would tell us we had an 8865 footnote. So as we go through, this is a very common footnote that I see. And it's a little bit tricky because what it's saying is that the fund itself, so here I called it RXX Fund LP. I'm pretty sure I just made that up, but that's the same as this. So what it's saying is that the partnership, so this K1 we received, is actually a foreign partnership. So a foreign partnership can be required to file a 1065 if it has U.S. income. So here, this is a foreign partnership. So in this case, you actually, to get the information you need to see whether you meet that 10% $100,000 rule, you just go back to the K1. So the K1 tells us they don't meet the 10% rule because it's less than 1%. But this year they contributed this $375,000. So here they are going to need the Form 8865 because they crossed that $100,000 threshold. And specifically with 8865, it's a Category 3 filing and a Schedule O. The Schedule O looks a lot like the Form 926 that just asks for the amount that was contributed, the name of the foreign partnership, and basic information. Again, there's no tax associated with this, and that's a lot of times the case with the international reporting. There's just penalties, no tax. But so this is a common example and one to look out for. If the investment itself is a foreign partnership, look out for the 8865. So the other example I have, again, we'd look at the K1 first. to go through like I just did. And then the first part or the first page tells us what parts we have. Again, there's no specific part with the 8865, so this isn't that helpful. I mean, part 2 and 3 tell you there's foreign source income and foreign taxes paid, but that doesn't mean there's a foreign partnership. So this not that useful, honestly, for at least for 8865. But there is a specific for a specific section for the 8865. So we know that this form information is going to be in the footnotes somewhere. So we need to be looking out for it. And I don't know how well you can see this. This didn't come out that well, but basically this is the 8865 footnote, and there's 2 pages of it, but it's very similar to the 926 footnote. And I even have to look closely to read it, but it says there could be an 8865 requirement, and it says that this is below its information to complete the 8865 and whether you have the filing requirement. So this is just the basic information for the partnership. A lot of it I've taken out, but it would provide the basic information, name, address, if there's an EIN. And then with this part in the section, the Schedule O section, that's the contribution information. So here it just says there's a cash transfer of $249 and a 0.065% interest after that. So obviously we're nowhere close to the $100,000 limit or the 10% limit. So there's no 8865 requirement here. And so I think the point is, and a lot of times this is what I see, and it confuses a lot of people because these K-3s, they attach a lot of foreign information that in a lot of cases isn't requiring any filing. But you have to remember there may be thousands of partners. So, I mean, one partner's share of this is the partner's shares. Maybe one partner's share of that overall contribution was more than 100,000. So they're just providing everything to everybody at the end of the day. That's a good rule of thumb to remember, that just because they're attaching these forms doesn't mean there is a requirement, but there could be. So you can't overlook it. But, like here, there's clearly not. So we're under the thresholds we can ignore. All right, so this is this one's a little different in that it's the form 8858, and this is for a U.S. person's ownership in a foreign disregarded entity. So a quick note on the classification of entities: when you have a foreign entity, it usually, not always, but usually it works the opposite of how it works with a U.S., say, LLC. So if you set up a foreign company, it usually, if they have limited liability like an LLC, it usually defaults as a foreign corporation, and you can elect to treat it as a foreign disregarded entity. So with these funds, I don't see this nearly as much. I just found an interesting example that I wanted to put in here. But so with these funds, it can come up, but usually that's because there was a specific election made to treat it as a foreign disregarded entity. But with 8858, it's required for the U.S. tax owner of the foreign disregarded entity. So the tax owner is the person that, is treated as owning the assets and liability of that foreign disregarded entity. So if we're doing an individual's tax return, and we get a K-1 from a partnership they're invested in, or a U.S. partnership or a U.S. S-Corp, that's going to be the tax owner, the S-Corp and the U.S. partnership. So they have the 8858 requirement. And sometimes, and it doesn't flow up. It's not like, and we'll talk about the 5471, but it's not like the 5471 or the 8865 where that requirement, there's attribution that can push that requirement to multiple U.S. filers, the same information. That's not the case with the 8858. In this case, if an S-Corp owns a foreign disregarded entity, the S-Corp files an 8858. There's no requirement at the shareholder level, individual shareholder level. So the footnote I usually see with this is, they'll attach. So here's the K-1, which isn't that relevant in this case. But you'll see the 8858 information here. So then we know that there's going to be some footnote related to the 8858. And then they'll attach the actual 8858 itself. So you're thinking, what is this? What do I need to do with this form? And then there'll be a footnote like this that mentions Form 8858 and dual consolidated loss information. So there's an exception to what I just said about only the tax owner, the U.S. partnership or the U.S. S corp, having to file the 8858, and that's where you have a domestic or a U.S. C corporation partner. So I don't think you can have a C corp own an S corp. So I think that only would apply in a U.S. partnership scenario. But there's these rules around dual consolidated losses, which I'm not going to get into because they're extremely complicated, but they don't apply to individuals. So a lot of times you'll see this footnote where they say may be required to file Form 8858 and apply the dual consolidated loss rules with respect to the FDEs. So if you have a U.S. corporation that owns a foreign disregarded entity and there's a loss, even if the U.S. corporation owns that entity through a U.S. partnership or S corporation, it may still have to file the 8858. But the basic idea here is if you're not filing a corporate return and it's not an 1120 getting this K1, you don't have to worry. You can ignore the dual consolidated loss information. If you're filing an individual return, it's not relevant. So generally, you're not going to see the 8858 requirement at the individual level if you're owning it through an S corp or a partnership.